We're ready to move on to our stock market segment. Lots of breaking news there because earnings season is officially upon us. Philippine shares closed marginally lower yesterday as investors waited for the central bank's actual policy decision, which came after trading hours and which we all now know is eventually a 25 basis point cut as expected. The PSE's main index settled at 74.37, but this morning, it's actually opening higher, though not by much, just by about 0.4%, 26 points. We're at 74.62. The broader all shares also up by 1/5%, 41.05. If you look at the sectors, most everybody's in the green except for one, industrials, which is trading flat, up by just 3 points. So for more on the markets, we are now joined live by Carlo, co-founder and CEO of DragonFi Securities. Hi, JC. Good morning. Good to see you.
Hi, good morning, Mimi. Thanks for having me again.
All right. First of all, why are we not seeing a more substantial bump up after that BSP rate cut of 25 bips? I know it was widely expected, but, can the market be any more cheerful?
Well, it has been a very eventful 2 months since last we spoke. I remember, Mimi, I gave you a 6-month PSEI target of 7,250, 7,500. And it already blew past that in less than 2 months. Actually, the indices were up, I think, 5 out of the past 6 weeks. So it's just the normal course wherein the index is just digesting its gains. As far as the BSP 25 basis point cut, obviously if your time frame is 1 day, yes, it has been discounted. But if you look at the totality of this particular interest rate cycle, and you look ahead and assume that we have another 150 basis points worth of cuts till the end of 2025, and you have a very bullish backdrop for equities.
How bullish? 9,000 bullish for next year?
I think we can come close to 9,000 by next year.
All right. But in the meantime, JC, we are seeing earnings numbers come in. We did break this earlier. BPI reporting record earnings for the first 9 months of the year. Let me just get you those numbers. 9-month net income, 48 billion. That's a record 48 billion pesos of net income in the first 9 months for BPI, up 24%. It's not the only bank that's reporting record earnings. AUB, Asia United Bank, which is the banking arm of the Robisco Group, also recording record 9-month consolidated net income of 8.6 billion pesos, up 41%. Are you expecting all banks to report record earnings for Q3? I mean, at this point, they're still enjoying the high rates, but rates are going to come down, and eventually, hopefully, the volume increase will more than make up for margins. But, I mean, how's the banking sector looking like right now?
The funny thing is, I actually sold my BPI at the same price around last week, thinking that it was short-term overbought. But yeah, I mean, it's pretty much this is happening globally, right? Yesterday we had Morgan Stanley report like a 50% bump in its capital market activity. So I feel that this is just the beginning for the banks. I'm looking to re-engage once it consolidates or even corrects. Even though, let's say for example, NIMs are pressured going forward, but as the BSP mentioned, they're gonna cut at a very measured pace. So the net interest margins are still going to be elevated, but and this is going to be you have the tailwind of, as you mentioned, increased loan growth, possible reinvigoration of capital market activity, investment banking. So I think the banks really have a great tailwind behind it. Not to mention the fact that RRR, the BSP intends to cut it as far as zero. So you have a lot of catalysts for the banks to move higher.
Still, wow, considering many feel that banks are already looking pretty frothy. I wanted to share some details about the AUB numbers. So Asia United Bank, which is the banking arm of the Rubisco Group, the Biscuit Group, consolidated net income also coming in at a record high for the first 9 months, 8.6 billion. That's up 41%. Net interest income up 11% year on year, 12.5 billion. The net interest margin ratio is at 5.3% versus last year's 4.9%. Loan loss provisions are down 93% from the previous year's 1.1 billion. Net NPL is at, let me get that right, 0.53% down from the previous 0.7%. NPL coverage ratio at 120.7%. Loan to deposit ratio 70.5%. Total deposits 282 billion. Total loan portfolio also up 6% to 199 billion pesos. Also, another banking news, PNB successfully returns to the bond market with its $300 million sustainability bond offering. So, okay, so banks are in consolidation. People are looking to jump right back in. Do you think the banking sector's earnings reports for Q3 gives you a good picture, an accurate picture of how the rest of the index names or listed companies will show performance for Q3, or are banks still the outlier? They're the outperformer, and maybe you have different set of expectations for, say, companies in other sectors like property or consumer.
No, banks are going to be one of the favorite industries, definitely. Yeah. But this is going to be this rally is going to broaden out. At this point in the cycle, when you have a rate easing cycle, you have financials, discretionary, industrials, and utilities and REITs outperform. So it's going to be a broad mix of different sectors outperforming along with banks. But I really do believe that banks, along with energy, they have unique catalysts in front of them that can really elevate their valuations.
All right. Banks and energy, right?
Yep, banks and energy. Because energy, it used to be energy was a defensive sector, right? But if you notice, like the best performer in the S&P in the S&P 500 is not Nvidia, it's Vistra, a company that supplies energy to the likes of Amazon, Microsoft, and Google. So in the world of ChatGPT, the estimates are that every ChatGPT search consumes 10 times more electricity than a Google search. By 2030, I think Goldman Sachs expects 4% of global energy consumption to be consumed by data centers. So just like everywhere else in the world, the Philippines is building data centers left and right, and it's so energy and water utilities are going to be prime candidates to benefit.
All right. Just one more update here. We are widening those gains. The index is up by 0.6%, 45 points. We're at 74.82. I think we're now ready for your blind item. Talk to us about this.
I didn't give a blind item this time around.
No blind item this time around. Yeah, okay, I'm sorry.
This time around.
All right. I was hoping to be surprised. I didn't check. I knew I was going to be surprised. So, surprise, there is no blind item. Okay, final question, JC. Yeah. Looking ahead for the next 3 months, we've got 3 months to go. Less than 3 months, in fact. Maybe first half of next year. You know, this year, the IPO pipeline has been pretty quiet. A lot really just pushed back their debuts, waiting for better market conditions. What are you most excited about in the next 6 to 12 months? Whether it's an IPO name that's, you know, making a lot of buzz, whether it's a company that's delisting, going private, or whether it's M&A that you're hearing about on the ground, on the floor. What are you most excited about in the local stock market?
A little bit of everything that you mentioned right there. I feel that a lot of companies are chomping at the bit to go public. They've been holding back on account of the unideal backdrop. But that, and I feel something to really look forward to is the continued rise in the PSEI. You know, as investors, we've all been craving for a true blue bull market, and I really feel the best is yet to come. So, like you mentioned earlier, although we're meeting resistance at 7,500, but that's how a bull market emerges. There's an initial strong sprint out of a bear market consolidation, followed by consolidation and churning as it climbs a wall of worry. And this will be no different. One thing to note is that the PSEI, you will never really get a melt up because of the composition of the PSEI. So you're never going to really get a runaway multiple expansion. It's going to be always earnings driven. Since cyclical companies, it's easy to model and forecast the out years versus, let's say, if you have secular technology companies, which are harder to forecast. So it's really going to be a series of higher highs and higher lows. But there's a lot to get excited about in the coming year.
All right, we are excited as well. John Carlo Lim, thank you so much for joining us. Always a pleasure to speak with you. I was actually looking forward to a lot of charts because you always come with charts. Hopefully, in your next guesting, we'll see you soon. Lots of exciting things happening.
Thank you, Mimi. Really appreciate
All right.
you having me.